Good day, guys. Don't think any more about it.
You guys there?
Hello. This is Brent and Robert.
Hey, guys.
Sorry, every time we put the access code in, it would slip an extra 5 into the...
Oh, really? Oh, funny.
Even though we only pushed the... Does that happen to anybody else? Figure out if it's our end or your end?
I'm sorry, what's that?
It's not. It's a GoToMeeting, so we don't actually have any control over.
Yeah.
It could be in the GoToMeeting because it happened. No matter what device we use to dial in, it would happen. So it's like GoToMeeting has a stutter in it or something.
Yeah, that's interesting. All right, so you guys ready?
Yes, we're ready.
Okay, so here's what I was going to do in getting started. Is I want to start from a project and booking a project and just run through it. And so I'm going to book the project. We're going to invoice the customer for a deposit. We're going to apply a payment. We're going to create purchase orders and get an invoice from a manufacturer and do all that stuff and show how it goes over to QuickBooks. So I'm just going to start right from, here's an existing project that we have that's in our current opportunities. And so all I'm going to do is I got a call from the customer and they said that they want to go ahead and book this project. So I'm actually going to go into my bill of materials real quick. And here's here's the bill of materials that I created. I imported the zip file and all of that. And this is something we've seen previously. And here's my quote that I gave the customer. And this is the current quote and the most likely. And I'm just going to print it real quick just so you guys can see the quote. So this is the quote with all the line items on it. And you notice that these items right here are in red because they have not been optioned out. But what I'm going to do is I'm going to leave them not fully optioned because I want to show when you create a purchase order on what it does when you don't have things fully optioned. So I'll go ahead and just leave that. So this was the quote that we got, we sent to the customer, and then we got a purchase order or a signed quote that told us to book it. So when I open this project, to book a project, all I do is I go to my order entry. And on my order entry, all I need to do is select the order type. And these are drop-downs that you create yourself. And so this is just it's a dealer bill project. The contract that they sent me a purchase order, our the terms of agreement, the terms of sale. I set those. I can also set the customer PO number. So if I got a customer PO number, I want to put it in here. I can also put a release by whoever, just so I have that. I can search on this stuff. And then what it does is this is the quote. So you can have multiple quotes that you supply a customer, and then the one that is valid and current will show up in this drop-down. And so you select the quote that you have, and I'm going to give a book date of today, and I also have an order book date. Now, real quick, just to explain why there's 2 book dates, is the job book date books this job here, the entire thing. But you can have multiple orders. So I can have an order I gave a customer and say it's for an office, and there's one workstation, and then next week they add on to this project and give me an order for all the seating. So I can have multiple orders in here. So
back on can I ask you a question? Back on the release by, what all is that releasing?
This is just saying that, you know, Stephen Edwards gave us the purchase order.
Okay.
Whoever,
That's
yeah,
what I thought.
this is the customer name, and you don't have to put anything there or not. But if you want to know who released the project, released the purchase order, you can put their name there.
I kind of like that, so I kind of like that. I just want to make sure I knew how to use it.
Yeah, it's actually really nice. What we find is sometimes they'll call, you know, we'll get a call and say, oh, who authorized the purchase order, who authorized this or whatever, and we have a copy of the purchase order or the signed quote. We also have their name here. So,
Right.
and then this is not putting. I'm sorry. Go ahead.
No, that's
Question on that.
I wanted to ask you a question about the job book date and order book date, but if you have more to say about what Brent asked about the release by, keep going.
No, go ahead.
Oh, yeah. What I was just going to say is this release by the customer PO is when you search projects, if you do some history, you can see all this information. Also, I don't know if you guys do a lot of GSA, but this is where you put the GSA purchase order number. And if the contracting officer calls in and says, hey, I'm calling regarding such and such purchase order,
Hey, Stefan.
you can...
Actually, there's an easier way. If you just go down here to your order search, you can put in a purchase order number here.
Yeah.
And this you can look for by anything, the address, the customer PO, the company, anything.
Correct. Yeah, in fact, let me, why don't I save this real quick.
And then do a search for 1, 2, 3, 4, 5.
Yeah. So I just saved this. Now, the things, these fields that have these stars on it are the required. So there's only 3 required here to save this. And then to book it, you have to set these 2 dates. And then it automatically assigns a job number. Okay? Now, if I go down here to an order search, and if I just type 1, 2, 3, 4, it's going to pull up every single project that has 1, 2, 3, 4 in there, or every single job. Okay?
Where's the 1, 2, 3, 4, 5? It probably has to have some value to it.
Yeah. So, okay, so there's another thing here that after you book
So
it.
now, if you don't mind, I'd like to ask you a question about that book date, if that's okay.
Sure. Yes.
So this screen is showing us a project, right? So project 6652.
Correct.
So you're saying that this could have multiple orders in it, which one of them is highlighted in sort of a pink color.
Yeah.
So the job book date refers to the project book date, and the order book date refers to the highlighted order?
Correct.
Is that right? Okay.
Correct. Yep. As an example, this would be... Oh, go ahead.
If there was another order that you had set up, order number 2, and if you clicked on it, the order book date, had it been booked, it would reflect that order book date.
Right.
Yes, and each order also has its own bill to, ship to, and deliver to. So each one is independent and has its own value. So and each one would have its own quote assigned to it, so it would have the correct bill of materials and the correct booking credit. So the order is pretty much our lowest level of this financial data. So, you know, the project is going to hold those many orders as a whole, but each order is really independently scheduled, independently financed, you know, paid commissions on, costed out. You can look at the project as a whole or an order when you're looking at the job costing.
Yeah.
Great. Thank you.
Yeah, you're welcome. So, you know, just a real quick, one of the things that we use is that, you know, here's this quote, and if this is for furniture, and then if they had another quote for doing seating, then they can be a different order. And then it has a different ship date, a different invoice, and everything. And also, you notice after I can set a requested implementation date. So if I want to set that, and this could be, you know, this is what we're looking at doing, requesting at the start there, and to complete here. And I'll show you where these things show up. As well, this checkbox requires implementation. And so it's defaulted for this type of project that it does require implementation. So when you book this, it automatically puts it in the queue to be scheduled, okay? So now what I'm doing is I'm just going to process the bill of materials here. Now when I process the bill of materials, this is what's going to show up on the invoice to the customer. So I can say I want to show all the line items of the quote, or I only want to show the phase. So I'm just going to show the phase of this, and I'm going to process it. And what it does is now it processes that bill of material and says 1, private office, Greg McRae, and then here's the price. Okay?
Just one thing to note about that is that when you go to process BOM, it knows how you quoted it, either by line item or phase, and it actually defaults to what you quoted as because your invoice really should look like your quote.
Correct. Yes. So at this point, now we book this project, and we have its job number, the book dates. Here's the booking credit. It automatically takes the booking credit from the quote and puts it there, and then you also have your sale price. And
hey, Stephen, why don't you delete that line item and actually do the line item 1 too, so you can see that.
Oh, okay, sure.
And you can also show how easy it is to reprocess if something.
Yeah, so if I want to reprocess, and I'm going to do it by line item, and what it does is now it will create it in line item form. So if you gave your customer a quote for line item, and you can send them an invoice for line item. If the customer likes a quote for line item, but they don't want the invoice to be all the line items, then you can very easily just delete that and reprocess it. Just reprocess it again as a phase. Okay? And so now, right from this window, depending on how you do your invoicing, you could invoice from here. Now, typically what happens is the person that's booking this doesn't necessarily do the invoice, but maybe you guys do the invoice at the same time. You can just click and do an invoice right from here. So what happens is maybe we're going to invoice for a deposit, and you notice that it's broken out by furniture sales and then other revenue. And so it's broken out into the 2 different accounts. I have
you've actually got something. There's something not mapped here.
Oh yeah, there is something not mapped.
So I didn't actually go through and make sure everything was mapped here. So let's just apply that.
Yeah. So if it's not mapped already, you notice that it did have a difference amount that needed to be posted. So you can select the account and then just apply it right to the so it maps over to the right account. So if we're going to invoice, and maybe we're invoicing for 50%, if I just type 50% in, it will automatically figure out what that invoice amount should be, and I can apply this as a deposit because I'm invoicing for a deposit.
No, that's if you've already done deposit.
Oh, I'm sorry. That's right. Sorry. If I already did a deposit, then I'll do that, and then I just save and print. Oh, did it take out my?
Yeah,
when it calculates automatically, can we have it just calculate on the furniture so that it's not including install or whatever else we don't want it, or how does that work?
I'm sorry, can you repeat the question?
When you put in the 50%, for it to automatically calculate the deposit invoice.
Yeah, what I did here is I'm going to do a bill type of deposit, and I'm going to deposit for 50% of the entire.
No, he's asking if you can do it just on the furniture. The only way you could do that is actually to type in the amount, and that
Yeah.
wouldn't really be 50% of the balance of the order. So, but you can type in that amount, and it would then figure out what that balance of the order is. So you can see down here, if my furniture sales new is $14,000, I could do a $7,000 invoice,
Sure.
and that's
Okay.
actually 20.44.
Right.
Yeah.
Okay.
Yeah, so you can do either one of, either way. If you want to do a percentage, you could do a percentage. If you want to just type in amount that you're going to invoice for, then you type it in, and it'll work backwards.
Okay.
And if you don't want to charge tax on the deposit, you can, if you're doing the deposit invoice, you can zero out the tax. And then it'll apply the tax to the next invoice.
Oh, okay, because it's calculating the tax automatically, right? So you can override that?
You can override whether you're going to invoice for the tax on any invoice, yes, and then the next invoice would show the tax, the balance of the tax. No matter what your invoice amount is, it's going to add the tax back in.
Great.
Another question. So the invoicing, the order is ready for invoicing anytime after it's been booked, or is there some other workflow that triggers the invoicing process? Like, let's say, like currently we invoice upon substantial receiving of the product. Once we substantially receive the product, the order drops into a list, and then it's ready for invoicing. Is there some sort of a workflow built into the system?
We have action item requests where you would say, where the person receiving would say, well, there's a couple different things actually. If you've received it, there's a today screen over here that says received product, which is a list of all your received product. Okay, or the best thing to do is actually create an action item for send
Right.
to a customer invoice.
Right. So the way we do it is once we receive the product, then the person that's our project coordinator then will send an action item to invoice for progress. And so once an invoice, and I have, this is a sample database that we're looking at. And so if we looked at my database as an example, I have an action item that says invoice for progress. And then you can have prerequisites and completion tasks for that action item as well, which are things that need to be done before you submit that action item. So these action items, this is your workflow. So typically when a salesperson is going to get an order, then they're going to create an action item to process order entry, and cut vendor purchase orders. And you can you could change the wording on this if you want. And so then what happens is an action item comes in. So let me just close this out real quick. If an action item comes in, Philip, are we?
We're in this administrator, so you're not going to see any.
Oh, okay.
I mean, we can assign administrator to some things.
That's all right.
Real quick.
No, that's all right. We don't have to do that.
I don't think we should get so complicated with this. I think we should do a 50%. If you're going to do a deposit invoice, do a 50% deposit invoice. But you need to explain that you're then going to delete that invoice because that invoice is not income. So it would be better if we just made a deposit without. I mean, unless you guys want to see. If you need to make a deposit invoice for your customer, then you would make that invoice, and then when you get that money, you would then delete that invoice and add it as an actual deposit. Because if you create an invoice and you send that invoice over to QuickBooks, it becomes income. And we don't want it to be income. We want it to be an other current liability until we actually are ready to invoice the customer in full. So you can get complicated right now, or we can do this real simple.
Yeah, let's just do this one. I'll just invoice for a progress payment.
Do what?
I was going to invoice for a progress payment.
Okay. But you were talking about a deposit invoice, so, I mean, If you're going to do it, just you have to explain. If you're going to do a deposit invoice, you have to delete that deposit invoice once you get the payment and add it as a deposit instead.
Right, right. So what I'll do is I'm just going to do an invoice for progress rather than doing an invoice for deposit right now, so we don't get.
Well, you can add a deposit and then do an invoice.
Okay, let's do it.
Go ahead.
Yeah, let's do the deposit and then see where we go from there so that it doesn't end up in income.
And let's send that deposit over right away.
Deposit invoice should not end up in.
Okay, so we're receiving this and received payment by check. And check reference number is 1234, and it's customer deposits and save.
Let's go ahead and send that over.
Okay. So
And
you
then see
notice
what it
here
looks like.
yeah.
Outstanding receivables are minus 15,000 because we didn't create an invoice to put it against yet. So it's not really even our money at this point.
So here's this is the deposit that we created. So all I'm going to do is I'm going to highlight this one deposit and I'm going to send to QuickBooks. And so this is Arrow Communications.
Hold on, it didn't go over. Let me make sure I got that chart of accounts in here. Am I blind? Do you see customer deposits in here?
I do not.
On the balance? Come on.
Oh, yeah, wouldn't it be up on the balance sheet?
Yeah, no, I've got it. I'm actually checking to see if customer deposits is in the chart of accounts here. It doesn't look like it is.
Okay.
I actually just threw this together as a test thing, so let me just go and make it real quick. I'm going to do a new account, and it's an other current liability, and we're going to call this customer deposits. Okay, let me just re-import the chart of accounts.
So what we're doing right now is we're re-importing the chart of accounts into emanage. And then what we do is we say which. Oh, go ahead.
Create the accounts first in QuickBooks, and then you import them into emanage.
Yes.
Correct.
Right.
That's the first thing you do is create your QuickBooks accounts, and then you import them. And that, so you see that now went over. So let's look at it in QuickBooks. So there's our undeposited funds, which it goes into because we have to deposit it into our bank account. Okay, and then in customer deposits is also the $15,000 here under an other current liability account. Okay, it also created the job inside of here. So if I look at the customer center, there's my Arrow Communications. Looks like that.
Okay.
Okay, so there's our deposit. It looks like it. Oh, it's because they have their we have this tax set up to do the taxing from here, so it's actually added tax onto that. But yeah, so the invoice goes over as a deposit here and a payment. So, but it doesn't hit income until you actually invoice the customer.
So the entry when you book the deposit, you haven't received it yet. You just booked it.
Well, no, that was receiving the deposit. When you add the deposit and you send it to QuickBooks, you're saying I already received it.
Okay. So what if what if you're just,
cash.
you're just billing them for, well, okay, let's leave it the way it was. So why doesn't it automatically go to cash and customer deposit liability?
That's right. It goes into your undeposited funds so you can deposit in the bank, and it goes into your other current liability account of customer deposits. But if we had, this is what I was trying to say before, is if you make an invoice for a deposit because your customer wants an invoice for that deposit, you can do that. But then before you don't want to send that invoice over to QuickBooks, because any invoice you send over to QuickBooks goes in as income. So what we did is you could create that 50% deposit invoice, okay? And then you could, as soon as you get that payment, delete it and then add it as a deposit. Then when you do your final invoice, you're going to apply that deposit, which is then going to back it out of your customer deposits and add it into your income account.
Okay, I kind of got lost in that.
Okay, you want me to explain it a little different? So what?
Well,
here, let's.
Did we want to get into that invoicing for a deposit that deep, or what? Okay, so what Philip was just explaining is if a customer wanted an invoice for the deposit, you would create the deposit and then, or create the invoice, but then delete the invoice. You wouldn't send the invoice over to QuickBooks because it's not
receivable.
Yeah, it's not a
receivable. And anytime we send over an invoice to QuickBooks, it becomes a receivable. And that would become income at the same time. And we don't want it to be income. We want it to be an other current liability until we decide to apply it as income to our invoice when we're actually, when we earn that money.
Yeah, yeah. Okay.
Yeah.
Understand that part.
What we do is we would, we're just creating if they said, hey, we need a physical invoice in our hand, then we're creating the invoice, sending it to them, and then we just delete it. And then when they send us the deposit, then we're clicking on to add deposit. Then we click it to add a deposit. And then that's how we would receive the money in. And then that pushes over into QuickBooks as the money there in deposits, but it's not in your receivables because we can't show that as a receivable yet.
We understand this part. What we didn't understand about was the undeposited funds. I mean, can we just do directly debit cash, credit customer deposits, and be done with that transaction of receiving a deposit?
Well, you have to deposit. What undeposited funds does in QuickBooks is then you go here and you say, I'm going to make deposits. Okay, and then and then you tell it I'm depositing all of these different things that are from undeposited funds, so that it then adds it into your bank account.
Oh, I see. It's a quick. Okay.
So the reason you want to do it that way is so that you have a deposit slip that matches whatever items you selected.
Well, yeah, it's actually any money that comes in, period, is going to go into undeposited funds. So you're going to be actually checking off all of this stuff that came in, whether it was payment against an actual invoice or deposits. It's all going to go into the bank. So you're going to actually have a mix of things in your undeposited funds that you're going to check off and say, I'm depositing this today, right? And so it then hits your bank account that day in QuickBooks.
But what you're telling us is that that's a QuickBooks feature. That has nothing to do with you.
Correct.
That's right. The only thing we're concerned about is that money doesn't hit income at that point because it's not our money yet until we earn it.
Right.
Yep. And we don't want to pay taxes on it.
Yeah, so that's the whole thing. It goes into deposit, so we're not paying taxes on it because it's not income, and a deposit is not our income yet, our money yet. Okay. You guys got that?
Yep.
Okay. So let's go back. In here real quick.
Just in the real world, you would get your deposit and you would move on. You would move on to actually, if somebody sends you a deposit, you know they've accepted the order and they've put down their deposit. So then you're going to go the next step. You're not going to stay in this window. You're going to go and create your purchase orders.
Right.
So there's no way. I don't think there's going to be a time that you're going to do a deposit and invoice at the same time. You're going to go and do the rest of the steps first. So why don't you go ahead with that, Stefan?
Yeah. Okay. So let me. I'm just going to close this customer invoice window, and I'm going to go back to my order entry. And just a quick recap. We booked this order. We processed the bill of materials, and then we applied a deposit that we got. So from here, the next step would be to create our purchase orders. And so when we go to purchase orders, you'll notice this error that pops up. And I did this on purpose. There are 6 errors in the bill of materials for the selected order. Now these are those, we didn't option out all the parts. So this is telling you that, you know what, you don't create a purchase order and send a dirty PO. Now, I can still create purchase orders if I want to. So I'm just going to go ahead and create the purchase orders. Inside of the purchase orders, you have your default ship to, but you can change the ship to. So you can select different ship to addresses if you want. This is where you can mark for it. And so, you know, you can type a note, mark for project 6652. And any special instructions?
It's actually important to note this part right here, that we're creating these purchase orders based on the customer order, so that because we can have multiple orders, we want this cost, right? We want this cost to go against this order, so that we can have an actual profit and loss on each order. So, right. And commissions are paid off of each order. So we want this cost. So that's why we have to have a customer order here. The customer order relates over to the quote that we used, which relates to the bill of materials, so it knows what to make purchase orders for.
Right. So after we get the ship to, the mark for, any special instructions, then you make sure what customer order that this is for, which is that order that we processed that quote to. And then we can put a requested ship date or send the PO on in this date, ship via, or whatever.
And you guys, the send PO on is a date that you can put in, because certain vendors take longer than others in lead time. So you can create part of it by vendor and say send these POs now and send these POs later, because you want to keep your cash flow. So if there's something that has a 2-week lead time and something that has a 6-week lead time, you can tell it to send PO on, and then you see it says POs to be issued to vendor. That'll go by your send PO on date, and you can print the purchase orders right from there and send them off. So that's what that send PO on is for.
That's a nice feature.
Yes, it's a really nice feature. And so what this is this basically, now down here, to create a purchase order, all I need to do is just generate purchase orders. But what I want to show you real quick is if you expand it, this is basically what your bill of materials is. So here's the option, here's the phase, and then these are all the bill of materials in here. And if I wanted to separate this out by vendor, then I just select vendor, and I can say, well, I only want to send just the architect's PO now. So I can uncheck this, and I process this order, because maybe this architect's I'm actually going to ship to the to Gunlock or Human Scale to put the fabric on top of these items. So I can have a different ship to, and then it will process this purchase order. I just generate PO.
But honestly, the reason why you would create purchase orders by vendor is really only because of the cash flow. Because it's easier actually to create all the purchase orders all at once and then go and change just the ship to on the one. That way you don't have to go through multiple steps. So,
right.
Sorry.
Yeah, either way, I guess that's a good example of the flexibility inside of emanage, that there's usually probably about 5 different ways to do the same thing. So,
Right.
so anyways, I have, right here we have a default ship to. I typed in a Mark IV. It automatically defaults to the customer order that's there, and so on. And then all I do is I click Generate Purchase Orders. And now what it does is it separates the purchase orders based out by vendor, okay? And so this is where that ship to address, what Philip said, well, you can also create the purchase orders all at once, and then if I select architects here, then I can go and I can change the address here, okay? So now if to do this purchase order, all I do is I select the PO, and then I print it. And this will print a hard copy purchase order, okay? So here's the purchase order number, here's the PO issue date. If I put a requested ship date, ship via, ship to, there's the vendor, here's the project and job number, salesperson, and so on, and my special instructions, okay? And then right from here, I can just click on 6652-1, 2-1, and I can just email this directly to my manufacturer from here. So what this is doing is creating a PO. I don't know if my name's in here. Yes.
No, but on this?
Yeah. So it automatically sets what the project is, and PO 6652-1, I can type, you know.
And you can actually set your signature inside of the email thing to be exactly the way your Outlook email is. We use HTML with pictures and everything, so.
Yeah.
Is this actually sending through Outlook, or is it separate from Outlook?
It sends through Outlook.
Yep, it sends through Outlook. So you notice what I did, and this is on every report viewer, is I just start typing the name in here, and it started pulling up people that I could select from. And what it did is, oops, let me delete that. It attached the document. It's saying that it's going to save the email. Here's the project it's going to save the email to. I have a subject. I put an email description, and then all I do
is... You guys, this is actually a really nice feature here. If you're sending to multiple people, but you don't want them to see that you're sending it to other people, you can check that send recipient's individual email, and it'll create one per recipient and send it individually to them. And you can also, if you have multiple accounts, you see you can choose which account it sends from.
Yeah.
Go ahead. You can send it.
And then I hit send. And what this is going to do is asking me the name of this document, so I'm just going to leave it at that. And I hit OK. Now, what happens here, and this is where you really start to see how powerful emanage is and how easy things are and how things just happen automatically. When I created that email, that default checkbox, it automatically put that PO in here.
The email itself is in there. So if you open that email from another computer, it's going to open up the email as an Outlook email. So you can see the attachment. You can see who it was sent to, who sent all of those things. So say no.
So in the email description, it's going to use, oh yeah, I like that.
Yeah. So it's the exact email, no matter whose computer you open that document from, it's going to open up as an Outlook message so they can see it.
Yeah. Yeah. So it
and that's on every report. That's not just purchase orders. That's invoices. If you're invoicing to a customer, the default is to save the email against the job that you're sending it from, and as opposed to the person, because people are not going to go into a person to look for an email. They're going to look in the project and see all of the things that were done for it.
Yeah. Okay. So anyways, we processed the purchase order. There also inside of the purchase orders, there is an OFDA XML if your manufacturers have an order entry system. So then you can just create an XML file and upload it right into their system if they're set up already. And I don't know if Philip is
configure it. I didn't configure it in here. Oh, well, maybe. You know what? Actually goes by vendor. So
yeah.
Hayworth is the only one I have set up in here. So,
Yeah,
but if you were on Hayworth as a vendor, then it would show all the settings. But all the settings come from the vendor because every vendor you have a different account number for every vendor. So
right.
It pulls it by the vendor.
Okay, so there's our. I'm sorry. Did you guys have any questions on the purchase orders?
I don't.
Nope, I think so far we're good.
The purchase orders were very easy to, it's just a couple of clicks and it process the purchase orders and then you send it. The next process, then we would be receiving an acknowledgement.
Actually, I do have a question, and then
Sure.
maybe I'm jumping ahead, but let's say that down the road, you realize that you need to add on another line item to the orders, and there's additional order to be added onto that PO. Is that easy to do?
It depends on, and it actually depends on how you want to do it. You can add the item onto the bill of materials, and then go. It depends on if you want to charge your customer for it or if you're going to eat the cost as to where you do this. So if you add it to the BOM, you can then process that line item onto the order, which then you'd be charging the customer for. When you go to create POs, it's only going to create the new stuff. So it would actually create a new PO for just the one line item when you go to reprocess or when you go to create POs again. So right. It depends. You could just manually add a line item onto this purchase order, but you would only do that if you're going to eat the cost and not charge your customer for it.
But still that cost will show within the order, correct?
Yes, because see how these purchase orders are assigned to orders here. So if you add a line item onto a purchase order, it's going to be cost against that. But and also, really, the purchase order is the estimated cost. It's your second level of estimate. Your real actual cost is the cost that you get from the bills coming from your vendor. So that cost is tied to the purchase order, which is tied to the order, because that's how we created them. Does that make sense?
Yep.
Okay.
Yeah. Yeah. So it depends if you're going to only absorb the cost or if you're going to bill your customer back. That's the bottom line. But yeah, you can add it right here in the purchase order window if you want to, and then it will apply the cost to that order. Okay, so the next thing would be receiving an acknowledgement from your vendor. So if I select Gunlock here, then down at the bottom here is to add an acknowledgement. So what this does is this is a list of all the items that you ordered. And so what people will do is if, a quantity of one, then they would enter the quantity, and then the acknowledged price defaults to the standard, but if there's a difference, then they would enter the actual price. This is where
and if you guys don't know it, right now we have Hayworth and SpaceSaver supply us with an XML acknowledgement. So this actually happens automatically for SpaceSaver orders and Hayworth, and we're trying to get every manufacturer to give it to us, because literally you save a file into a folder, you click a button, and this part is done, because there's nothing more tedious than going through line by line, especially with furniture, and checking every single option to make sure you got the right fabric, make sure you got the right casters, make sure you got all those things. The system will do it for you if the manufacturer gives us an acknowledgement back. So far Hayworth and SpaceSaver have done it, but we're looking to get every manufacturer to give us that.
Right. Then you don't have to manually go through and fill that out. Now you can also, I don't know if you saw what I did, but if you're confident that your vendor sent you the right thing and you're not going to go through here and check it, then you can just add your acknowledgement number, your acknowledged ship date, and you can just click on this acknowledge and save all. And it's going to say, are you sure you want to acknowledge items in the grid with an acknowledgement? And then it acknowledged it. So put an acknowledgement here.
Now,
okay.
just actually what you should know about this is that actually when you create purchase orders, they show up on the list automatically of POs not fully acknowledged. So until every single item on that purchase order is acknowledged by the vendor, it's going to be in this list. As soon as all of the stuff is acknowledged, it's going to be in this list, vendor acknowledgments, okay, so that you can track when you're supposed to get the stuff. It's also in your current backlog. So if you look at any order on your current backlog, every acknowledgment is going to be listed with that order. So right in the grid is going to be, let me just pull this field up here, acknowledgments. Okay, so every single, okay, so and if there's multiple, it'll expand out to hold all the acknowledgments. You see, like this one, I can actually, it's going to have all of the, which one was it? This one. This one has 2 acknowledgments on it. No, this isn't here. We're going to do this. Okay, so you see how these have multiple acknowledgments in them. And if they're received, it's going to say that they were received. Or if they're supposed to ship on a certain date, they're going to show that. Okay, so every single order is going to show that in the backlog so that you can keep track of that. Why is it sitting in my backlog when I received all the product, 3 weeks ago? Somewhere somebody dropped the ball because it shouldn't be in here anymore. If we received it and installed it, then it should be gone from my backlog. I should have invoiced it by now. So it's a double check to make sure all this stuff is done. Okay, sorry, Stefan, go ahead.
Yeah. Yeah, no, that's perfect. So what we did just now is we got acknowledgments from a couple of these vendors. Now, what's going to happen at this point? And yeah, once you receive the acknowledgments, as Philip went over, this is your workflow of your business, the process of a project. And so it's shifting from the PO is not fully acknowledged and then into vendor acknowledgments. Well,
and that's automatic. That automatically happens as you acknowledge all of the items. It comes out of that one list and goes into the other list. Right.
You'll also notice here, this is our estimated cost, and then we have our commissionable cost. And then what we do is we add an invoice. Once we get an invoice, this ships from the manufacturer, then we add an invoice. And so that invoice from the manufacturer and the date, we set the date that we got the invoice, and it will automatically set the due date based off of the terms of that manufacturer, or the terms for the vendor. And then you put in the dollar amount of what it was, so 25,403.40. And then you notice here it has the show as QuickBooks. It's automatically default. It automatically defaults to this account.
And then no. Hold on. You have to apply this.
Sorry.
And yeah, also, you guys, this right here, down here, if you got multiple acknowledgments against that purchase order, all of the acknowledgments are going to be listed here. And this is a little audit to make sure you apply the vendor invoice to the acknowledgments so that you should have a 0 remaining. It will complain at you. It won't stop you, but it will complain at you if you haven't accounted for all the acknowledgments with this vendor invoice. Okay, because there will be a remaining balance here that you haven't gotten a bill for. Okay. So generally, your vendors will bill by acknowledgement, but sometimes they'll send a bill for the whole thing with multiple acknowledgments. So you just check off apply. They'll double check. And also, before you get this invoice, this money, this $25,403, is also in your backlog, and it's called unbilled cost. So even though you haven't gotten that bill yet, it's going to show in here in the backlog is unbilled cost until you actually get that bill in, and then so you can see what money do I have promised out there that I haven't gotten invoices for yet. Okay. Go ahead, Stefan. Sorry.
No, that was good. I was actually going to, after I did this, applied this, I was going to show that. Because that's a, let me just save that invoice. This is, you guys see how valuable this is. As you can see, you know, you'll see all your, what your invoice is, what payments you've received, but you also see based off of acknowledgments, there's an acknowledgment out there that you haven't received an invoice yet, so it's going to say, hey, you are going to be owing this money soon. So you can see what's out there that you're going to have to pay. So yeah, these invoices are tied to these acknowledgments, and then that will show on once you do the.
Why don't we send that to QuickBooks real quick?
Yeah.
Let's
Okay.
just send that payable. So you can see what a bill looks like when it goes over to QuickBooks. It's already open.
Yeah.
Now, when you did this normally, would you be sending several jobs all at once over to QuickBooks?
Yes. Yeah, you see that there's more than one job in here, but one of these is at 25403. I can highlight both of these and send them both at once. Basically, once a day, you'll go in at the end of the day and you'll highlight everything, you know, all these different things as you want to, because you have a choice of when you send this stuff. Okay? So you decide, if I don't want to send that bill over yet, I don't have to. I can select these, but it's going to send the selected ones to QuickBooks. Okay? So all I'm going to do is send to QuickBooks. I've got both of those highlighted. It's going to send both of those so that when I go over to QuickBooks, if the job wasn't created already, you see how this is a new job that we just put in there. Okay? And then if I go into my vendors and enter bills, you'll see if I go to previous here, there's my Gunlock bill for 25403. Okay, and it's in WIP furniture right now because that's how we automate the WIP. If I take that cost today on the 29th, but I get billed next month, it's got to go into WIP until I'm ready to take that cost against the job. It's still going to be a bill that I have to pay, but it's not going to hit my COGS account until I invoice my customer because I put it in the WIP for now, so that I recognize my cost and my expense in the same month.
Yeah,
Okay,
this is
so
that. Yeah, once you,
So hold on. So the cost on the product doesn't hit the financials at the time when you actually invoice the customer.
It's a bill. It's a bill, so it is an accounts payable. If you choose to do our automated WIP, it's going to go into WIP as an other current asset until you invoice the customer for whatever percentage, either 100%, it's going to recognize all the cost when you do the invoice.
Right.
If you do 30%, it's going to take 30% of the cost and recognize it with that 30% of the income. Okay.
Right. That makes sense.
Yeah,
That's what we would expect.
So why don't let's go back into emanage and we should invoice.
You already invoiced, so we already sent it, so you can't do it. You can't really do anything there, and you don't want to beat a dead horse. You guys see how it works, right?
Yeah.
If I apply it to WIP, then when I go and invoice, we'll see it when we invoice, but we want to go through the whole process. So the next step in this is receiving the product. Okay, but even before you receive the product, once you get the acknowledgement, you know when you're going to get the product. So once you know when you're going to get the product, you really want to go in and schedule your installation. Okay? So down here, every order that's created and booked that requires implementation, you guys remember that checkbox that was on order entry. Okay? Mm-hmm. That makes it show up in here. Okay? So when I go down to...
Do you already have, you could already have it set up in install, it just wouldn't have an install date, right?
Well, that's what this is. This is our to be scheduled. Okay, so if I'm just going to sort this by date here and find 60, sort it by job number. 60 what?
6652.
We do have that in there, don't we? 6652. Let me just do a Control F. Okay, so there it is. You see it automatically came into the list of booked orders needing scheduling because it required implementation and it was booked as a job. So in here, I can see when did the customer want it done? Okay, requested complete was 6/4, requested start is in here somewhere.
That's the very beginning.
Okay, requested start right here, 6/2. However, what I also need to look at when I'm going to schedule something is the acknowledgments. So if you click the plus next to these, it will actually show me the acknowledgments for that order. So I can see, when am I supposed to get it? Acknowledge ship date, right? If I've received it, that's going to be in here too. Okay. So anyway, I can base my my scheduling off of when they're shipping it or when the planned delivery date is, and I just drag and drop this job up onto the calendar, onto a date that I want to go. Let me go to 2nd, June 2nd. Okay, so I drag and drop it here. I drag and drop it here.
Hold on, so
Wait.
can I? So those items that you were dragging and dropping, those are actual line items
orders
from the order, or those are acknowledgments?
No, those are the orders themselves.
Okay.
The whole order gets scheduled.
But within the same order, let's say you have 5 different manufacturers, you might have 5 different acknowledgement and ship dates. What kind of a date is it showing to me as the?
These are all your acknowledgments. So every acknowledgment that's against this order is going to show here.
Okay, so these are line items within a specific order then?
These are the acknowledgments from the vendor. These are the 2 that Stefan put in.
Okay, so it's on the same
They're the
order.
Acknowledgments of the, right. So what happens is the whole order is scheduled. It could go on for days and days and days. Doesn't matter to us, but if it's going to go on for days, you just change the end date, and you say that we're going to do multiple days. What you're going to do is once the item is saved, you're going to tell it what items they're going to take out with them based on the acknowledgments. Okay, so if we go here and say confirmed, and we're going to do furniture, okay, and I can put general instructions here. I can format it, bold, do a little bold or red or whatever I want, and I can save the item. Okay, when I save the item, it wants me to choose installers that are going to go and do it, who I want to schedule for that. I don't have to do that. I can do it after the fact, or I can do it later on. The simple fact is now this is on my calendar. It's going to leave this list down here because now it's not needing scheduling. It's already scheduled. Okay, so it's not going to be in this list anymore. It's gone because now it's on the calendar. So I can choose to assign 1 or more people. Okay, so let me just grab a couple people here, and I can add them. And I give it that pay schedule. This is what we're talking about with the payroll, right? So this is the pay rate and cost that it's going to use. So it'll take the pay rate from the pay schedule and the cost rate from the pay schedule for each of those people based on this. Okay, so for the prevailing wage job, every single employee might have a different cost rate on that prevailing wage, but we're going to choose the pay schedule that makes sense for this. Okay, so let's just do standard pay, and we can leave this at 8 to 8:15. That's fine, or we can actually put the hours in that they're going to do. But when we go to do payroll, we can modify any of that for that job and create timesheets straight off the calendar if we assign the people here. Okay, so I assign those people. They show up over here now, and they're no longer available to add again. I don't want to add them a second time here. So you can see here that it's got all the information about them. If payroll is created, this will be checked. And once payroll is created, this installation item locks itself. Nobody can move it. Only an administrator can delete it. Okay, we got subcontractors. So if you're using an outside, installation, you can add subcontractors. Tell it how many people they're going to be supplying you. We do have also ratings for your installers and for your subcontractors, so you can see, if you think somebody's not doing a great job for you, you can literally rate them on every single installation and then look and see what those ratings are per person or per subcontractor. Now, here's where you put the items to install. Okay, so the items to install here are going to have the things from your acknowledgments. Okay, so you can add by acknowledgement. You see that I see whether it was received here or not yet. And I add it in here. I can do special instructions on each one. It's going to have the bin location. It's going to have the bin location printed on the work order for these things that I add on here. Okay, so let me just go ahead and print this work order. On the work order, we have all these different configurations. So we give you options. So you can set these on the fly, or you can save your settings and use them all the time. So we have contacts. You can print the contacts from the project on there so that the people going out know who to contact if there's a problem. We can print the installers or not. If I don't assign the installers right off the bat, then I can just say I don't want to print it. I'm just going to send out a work order with some guys. I can print the scope of work, the project name, the subcontractors or not if I'm not using any. I can print a punch list form. I can print a map. And if I need the order name on there, I can do that too. Okay? So I'm not going to save these. I'm just going to use them for now and then print this work order. So you can just hit print work orders. You can print multiple at once. You can also drag and drop these jobs around, highlight multiples, print work orders, highlight multiples, drag and drop. Okay? So the work order, you see it's the installation items here will have the item location, your bin location that they were received into. This little checkbox for punch if there's a problem when you take them out. Okay, there's a customer acceptance on the bottom of the page, every page. It's got not only the part, but it's got all the options because you could have the same piece of furniture with different fabrics that go in different places. So we told it to print the installers, so there's a place for them to fill out their time if they're not using our mobile time clock. And then the last, there's a punch list page if you wanted to print. That was what I told it to print, but you don't have to have this section. And then there's a map of where it is.
Can we?
I know this doesn't really have a lot to do with the county, but one question. Hello?
Yeah.
You dialed out.
Yeah.
You said you had a question?
Yeah, sorry, we had something weird happen down here.
Oh, we can hear you loud and clear.
Okay, we got you back. Our system automatically dialed Phoenix. Maybe it's set to do that at 3:45. I don't know. But anyway.
So yeah, where this has to do with accounting is where you're going to do your payroll. Okay. So once guys are assigned onto these jobs, if they're not going to use the
hold that thought for go back to the work order. My question doesn't have to do with the accounting, is what I was going to say. Is there a place on the work order that has a brief scope of the job?
Yes, I told them.
Yeah.
You can actually have the scope of work or the special, those general instructions. So the general instructions are per scheduled item. So if I want to type in something here, or when I print the work order, you see I can actually tell it, I can tell it to print the scope of work with it. Okay, so if I print the scope of work with that, it's going to have the scope of the job. Okay, however big that scope of work is it's going to print the whole thing on here in the project scope section. So it's any way I want to do it. If I want to have the scope that the salesperson came up with, or if I want to actually type something in, I can do that as general instruction.
Okay, perfect. Okay, now let's move on to the accounting part.
Okay, so the timesheets, remember that we have a mobile time clock. So if you guys have smartphones, they can literally clock in on the web portal into a job. If they sign into the portal, if they're an actual user of emanage, they can do their whole crew at the same time. Okay, so if I go here, I'm going to go to...
This would be like the foreman is doing this right now then, right?
The foreman, it's easier if the foreman actually does it because then they can log in a whole crew. Okay, so the time clock here, and then the timesheets get tied together unless somebody goes in individually and clocks himself out, then they become not part of the crew anymore. But if they stay part of the crew, then the main guy is clocking them in and out for lunch, whatever. So you see we have a couple different options here. We have a new daily timesheet. A daily timesheet is that paid timesheet, okay? No project or with a project, okay? So if we go to new daily timesheet for a project or ticket, okay, they choose their employee name, and this is actually my database, not the furniture one that we're looking at. So, and then they can choose from the projects that are in the backlog. If you, there was a checkbox there when I chose this for a project to show the scheduled items. So if I had checked that box, it would only show the things scheduled for today. Okay, so but this shows them the whole backlog. So when they click on this job, okay, it'll give them the address, the phone number, stuff like that. They continue, and then you see it's a clock in. I can also clock in an entire crew here. So if I say I want to do Stefan and Kurt and April, what I do here is going to create a timesheet for myself and those people. And I can put in the work performed and clock in. But what it also does is it actually logs your latitude and longitude where you clocked in, and it'll show you on a map where people clock in, where they clocked out, where was it in relation to the job they were supposed to be at. It'll give you the distance in miles from the job they were supposed to be at. So at every punch, it logs their latitude and longitude so that you can see it on a map or in the timesheet search to see how far they were. Okay? Now, that's one way. If they don't have smartphones, a lot of people don't have smartphones, you know, that are out installing. Maybe they don't, either you don't supply them or they can't afford it, okay? So if they don't, then you can come back in here and you can process timesheets from Install Calendar. If you do this, you're just putting in a date range. So that was the 2nd, right? So I'm going to put in the 2nd. Any changes that I need to make, you can see here are the 4 guys that I scheduled. If I need to change the end time on all 4 of these, because they actually didn't work only 15 minutes, they worked until 4 o'clock on this one job. So I can change that there, apply it, okay, and then it's going to be, now total time is 8 hours, right, because now it's 8 to 4. And then I just create timesheets for selected rows. Okay, and those are gone. I can't process them again. They're already processed. So when you go into that job, okay, and you look at, let's say, the final profit and loss, okay, it's got your labor costs for those 4 guys working those 8 hours. It's also got your timesheets that it created from doing that, okay? And remember, this is the one with the actual pay rate. Okay, so this is the pay rate per hour that you're actually paying them, and then you've got your labor cost, which is your cost of having those employees work. Okay, so when you actually process those timesheets from the install calendar, it's actually doing both things at once. It's creating your cost, labor cost, which is this, this is made up of these, and it's creating the timesheets for you to pay them through ADP. Okay, and those are the timesheets.
Yeah.
Can you pause there for a minute? Number one, who all would have access to be able to view this information?
Whoever you decide. There's 130 rights that govern what people can do or not do, view, edit, anything. So there's extensive rights that govern what somebody can see and do. So you decide who can see that.
That's what I hope your answer is going to be. Number two, suppose you have in this crew one individual who's part of the crew, but he's doing a special item that was requested by the customer, and it's a billable add-on that, I mean, it just happened right on the spot after you were out there. It wasn't scheduled as such. It wasn't booked as such. But the customer said, hey, while you're here, can you do this? And the foreman says, yeah, we're glad to do that, but unfortunately we'll have to charge you. But it's going to take about 3 hours to charge you for that. How do you
And that's cool. Your cost really isn't going to change on that, but you will want to bill your customers. So what you would do is you would go over to your order entry, and you would add a line item on here so that you're billing your customer for that. The order entry is going to be where your income comes from. Your cost is going to be the same because the amount of time that they're spending is your cost. So creating the timesheets is going to do that part.
Somehow the foreman out in the field has got to record that, though. Can he do that?
If he's actually using the time clock on the web portal, then yeah, he can put it in work performed right there. But actually, our new web portal is going to have the order entry on it. So basically, he could add a line item himself.
Yeah. Yeah.
Right
So
on the web portal.
on the new web portal. Here, let's go back real quick, Phil. Go back to the order entry. On the new web portal, you're going to have the order entry. So if they're out in the field, all they would need to do is create a new line item, and they would say, 1, and they call it, this could be labor, and then they could give a description. Reconfig. Oops.
Yeah, reconfig, yeah.
Yeah, reconfigure furniture on site, and then they just put a price, and they could do it. Maybe it's a per hour thing. So maybe he says this is going to take 2 hours, and you're going to charge him.
And you'd want to change your unit of measure to hour.
Oh yeah, hour. And then change the price. Could be 45. Yeah. And then save.
And if it was taxable, then you would apply the default tax rate, and it would calculate your tax out there.
Right.
Yeah.
So will it show me the cost? Will it show me the cost that they spent working on this specific item as part of this item, or will it all be rolled
it's for the day.
Job?
Right. It's actually inside of the timesheet. So when the timesheet's created, that is the cost.
Right.
We don't do a per line item costing because it's just what we don't.
Yeah, there's no way to do. There's not really any way to do that, really, because it could be that all 4 of these guys are on the job, and they said, hey, we need to do a reconfigure, and you said, okay, well, we'll do it, and 2 of the guys did it. It's just part of the cost.
There is a way that you could do it. They could clock out. If they're using the mobile web portal, they could clock out of that job and clock in and do another timesheet and put different work performed, and then you would have that as 2 separate timesheets, one for the scheduled installation and one for the reconfigure. So you would each person that actually worked on that would have 2 timesheets, one for each on the same day on the same job. So you could do that. It's just a matter of if you're going to use the mobile web portal, it's a lot more flexible for the guys to be able to do what they're do this part for you, and say if they're doing something else that it's easy to do. They're just creating a whole nother timesheet. The thing that the mobile portal does not let you do is it does not let you have overlapping timesheets. So you can't have an open timesheet and create a new one. You can have one daily timesheet going and one cost sheet going at a time. So you can have, because remember the daily timesheet is what pays you, those costs, if you do cost-only ones, then you can only have one cost-only going on at one time. You can only have one daily going on at one time.
So I'm not going to be able to get paid twice for one day anymore? Is that
yeah, no, it doesn't let you. You could do it actually in the time clock, but it actually messes around with the time and things start going negative. It's real easy to see. But yeah, the mobile time clock does not let you do that. And like I said, it does log exactly where you were at when you did it. If you look at the timesheet search, or we have a time clock map, so you can actually look and see where people were when they clocked into a job. So and it centers where.
Question on that map.
Mhm.
Is that triggered by somebody looking, or does it keep a history?
It's whatever dates. You see, I've got a date range. I've got a date range here of view this date range. So if I go all the way to 6/3, I don't think I actually clocked in, did I? But yeah, it would actually show, it'll show whatever date range you want, and you can choose to see clock in, drive time, whatever. You choose what you want to see in here. So if you want to see where people clocked, and you can even do it by.
Could I look at it and see, wow, last Monday the whole crew went clear across town for lunch and they were there for 3 hours. Can I see that?
Good. Well, it depends on if they clock in, where they clock in and clock out. Okay, so if they, the whole point of this was that I don't trust people, so I want to know, did they clock in 5 miles away from the job? And really that's not appropriate. So it'll tell you if they're clocking into a job and they're 5 miles away from it, that's a problem, right? So, and you can also see it.
I see what you're saying. So it would show you if they clocked out, went to lunch, and then they could see that they were going to take a lot longer, so they clocked back in an hour before they
exactly.
arrived.
Yeah.
Exactly. We don't want that to become a habit for people. So we put in the latitude and longitude. It only happens on the mobile web portal. So it's a decision you have to make. But you see here, it'll actually track the latitude and longitude of where the job was and where they drive time start, drive time end. All of these things show the distance from the job. Okay. So every single time they punch, it takes their latitude and longitude from their phone, and it will log it against here, so you can see the distance from where they were supposed to be. So,
can we tie the GPS on the vehicle into this?
we do have we do work with Teletrack. If you are using Teletrack,
do you remember who
is
we're
Teletrack
using?
your GPS?
I can't
we
remember.
Actually integrate. We integrate with Teletrack. So actually we do import, they have a web service that we import basically what speed they were going, where they were, every time it polls. Every time it polls the truck, it makes an entry, and we import all that. So yes,
okay,
if you're using Teletrack.
That's good to know.
So, but the time clock works just from the phone GPS, and it doesn't poll it. It's when they clock in and clock out. So,
right.
But you saw how just even if I just use this process timesheets from Install Calendar, it's pretty simple. It does everything all at once. So it does create my timesheets for ADP, which I just export to payroll. It creates my ADP file. I upload it into ADP software, right? They give me back my journal entries to import into QuickBooks. But emanage already has that data, so we don't actually have to import it into emanage. We already have it. And we're what's feeding ADP, so they're going to get their data from us, which is then going to go into QuickBooks as a journal entry. Okay? So
it wouldn't have taxes and all that.
Right, we don't do the taxes. However, that's what the actual cost per hour is for. That's why we have that actual cost per hour, because that's what I was saying yesterday, is that the cost of having the employee is all those things: workers' comp, insurance.
The actual cost is their pay plus their burden and their benefits and everything. That's what actual cost is.
So, and you determine what that number is here. We don't actually figure that out. So, but because you're going to know what their workers' comp rate is, and how much do they get for vacation, all that stuff. So.
Yeah. So like what our actual cost for our benefits and our taxes is 25%. Is where it's about.
It's a 25% burden on the employee.
Yeah.
For the cost for the job. And like I said, you can do a formula like that and do a percentage, or you can actually add up their stuff and get an actual number. It's up to you. Okay, so we've done the installation, okay, and now we're going to go and do the, we're going to invoice the customer, okay. So, and you can actually mark on the calendar, right on this calendar, you can say, mark the implementation as complete. If you guys use that, not a lot of people use this. I'm not sure exactly why they don't, but you can mark implementation as complete, and then it will automatically go into a list of installed, not yet invoiced. Okay, and you could invoice from there. Most people use an action item, you know, because if there's punch or something like that, that you're going to go back and do that punch. But most people create an action item. So you can then go in here and you can say, I'm ready to invoice my customer. Okay, so you're going to go in here and you're going to say, I want to do a new invoice. Okay, and I'm going to get rid of that $3,000 some odd dollars, put it into furniture income. All right, and I'm billing for 100%. It says my amount due is $36,279.18. However, I need to apply my deposit, which then brings my balance down. And you see, it credits my customer deposits and debits and puts the rest of the income into income.
Right.
Okay, and then I can save and print. And again, just like I didn't do a final. Okay, I can put any special text here. We do have these things, this thing called auto text. So it's those things that you type over and over again. You can put a little code in, and you just type the code, and it'll type the text for you, kind of like Word does. Okay, it's like an autocorrect. So anyway, then I can save and print.
Special text, is that to be noted on the invoice for the customer to see, or is that just an internal?
Yes. No, it's for the customer to see. So like if you change offices, if your address changes, you can put a special text in there for please update your records with our new mailing address. Okay, and so anyway, I'm going to go ahead and save and print so you guys can see. And you see this convert WIP to COGS. It's automatically checked because we used WIP. It's aware that you did some WIP, and so it's backing it out automatically. Okay. If you don't use WIP, this is not checked. It doesn't do anything with it. You can also view the vendor account postings from here, okay, and see what stuff was done in here. Okay, so all the account postings that were done against that. And save and print.
Hey, Phil, if I can interject real quick. On what it's doing, you know, with that WIP, it's making a journal entry of the WIP. It's backing it out, moving it over, but it also did it with the deposit. So basically, there's two functions going on right there.
There's three.
Well, actually, yes, three. But what it's doing is emanage is acting as a bookkeeper for you. Rather than you having to go in, because typically WIP is a manual function. You have to go in and journal entry it from one account and move it over to another account. But now emanage is actually doing those journal entries for you automatically, so you don't ever have to go and do that.
Right, and remember, so we have some stuff in WIP here right now. If I go to my, which one of these reports is it? Financial. I just want a basic.
Yeah, go to your company financial.
Company and financial. Okay, so let's do profit and loss standard. That's not going to have my WIP on it.
No, you got to go to
the detailed one. I haven't actually done this. Detail.
Interesting.
Where's my WIP?
That's good.
Let's just go to my chart of accounts. So my WIP over here, my WIP is going to be WIP.
Okay.
So I have my 25,403 in here, okay? And I also have another one from the other thing that I sent over. Okay, but when I go and push this receivable over that I just created, which was arrow, right? Okay, And you'll see if I click the plus next there, it's got the whole breakdown as it showed up in there. Okay, and I can send a QuickBooks.
I'm sorry. Yeah, does it come through to QuickBooks as a batch, or do all these individual items might make its way into QuickBooks as well? So I can actually, if I'm reconciling, I can see all those individual items.
Everything. Yeah, everything goes over, and I'll show you. I'm going to show you right now.
Okay.
So when I send it to QuickBooks, what's going to happen is, if I look at that invoice, the line item, you'll see now that my WIP furniture ancillary is now 0. Okay, and it's gone into my COGS account. Okay, when I go into the invoice, let me just go to Customer Center and go to Arrow. Okay, you see my invoice here. My invoice here actually has all the items. Okay, it's also going to show on your reports, on all your reports, but it also shows, we don't, like I said, we don't make every single line item for every piece of furniture, because QuickBooks could never handle all that because of all the different, every piece of furniture is different. So what we do is we take your accounts, and we make items out of them, and we put those items onto the invoice, because you're not going to ever send an invoice from QuickBooks. You're going to send the invoice from emanage. So this just assigns these things to the different accounts. Okay. So
yeah, this is what's so great about what we do in the integration with QuickBooks is you could be a huge company and run off of QuickBooks, because QuickBooks is just being the general ledger. It's not handling all those parts and pieces. emanage does, what, 90% of the accounting?
You see, if you look at your item list here, you've really only got the things that you're sending over from QuickBooks. And they're assigned to the accounts, which is the exact same name, right? The account and the name of the item are exactly the same. So only the amount of accounts that you have that we push over are going to become items in QuickBooks. So right. There is no, it just doesn't get bloated.
That's why we have customers that are $60 million, $70 million companies running on QuickBooks.
Right. That have thousands of, tens of thousands of transactions in a year,
Sure. So can you, is this, are we looking at can we look at a specific account in QuickBooks so that I can see the detail, what it looks like?
Let me just, I'm not a QuickBooks expert, I just do the integration. So, but I can look here and see, let me look at
just the one that you just sent from the invoicing, like the revenue that you just invoiced and sent over.
So if I go here, I should be able to, that's accounts receivable. Let me do.
No, there'll be income. Oh yeah, you could do receivable as well if you want, that's fine. Either income or receivable.
Let me do that. Let me do a quick report. So a quick report will show you all of those things there and what job number.
Yeah, and if you double click on one of those, then it will open up
the invoice, right?
Yeah.
So you can see that
these are all the line items from your invoice that you sent over.
No, these are invoices. These are the invoices themselves. If you double click on one, then you get into the detail.
Sorry, that's what I meant.
Right.
Yep. Okay.
So
this would be my sort of a kind of trial balance thing if I'm looking at it from accounting. Okay.
Yeah. So oh, go ahead.
No, you go ahead.
I was just going to say, it makes it, QuickBooks is so easy to use, and then you're able to create an accountant's file and just send it over to your accountant. There's no printing up in all the reports or anything. You just send a file right over and they're done.
Yeah, and if your accountant uses QuickBooks, it's really simple, because you just send them that accountant's copy, they take that copy and they pull it into their accountant's version, and they do all their work right there. So, yeah. And like I said, we're not an accounting system, but we do so many accounting functions. The only things that we don't do is a general ledger and write checks and, track your bank account. But pretty much we do everything.
Right. Expenses,
pretty much we do it.
Those are applied directly in QuickBooks, correct?
I'm sorry?
You said yesterday that expenses are applied directly in QuickBooks. Is that right?
The bills, right. So remember that the bills go in as bills. And then if you're using the WIP, they're going to go into WIP until you do your customer invoice, and then they'll get they'll become COGS on the job.
Expenses, anything that is not related to
right. Yeah. So you're not talking COGS, you're talking the overhead expenses. Yeah, they're done directly in QuickBooks.
Okay.
So you would enter bills. In here, you would go to enter bills, and you would do them from here, or and you would just do them in here. We wouldn't have access to those vendors and do bills because they don't relate to a project or a service.
Okay.
Would you do this? And I don't know if you have this in right now. What if we wanted to see the check number on this? I guess that's within the.
Well, you'd have to pay the bill. So what you do is you go to vendors and you pay bills. Right now we're just looking at the bill. So obviously you have to have a bank account set up. But then you would check off all of the bills from that vendor that you're paying, and it would generate a check.
Okay, I'm really asking a QuickBooks formatting, so I apologize. So we can move on from that.
That's okay. It's pretty simple. Like I said, it's pretty simple. You pull up the vendor, and it shows you all the bills you have to pay, and you just check them off, and then it'll generate your check with the details of each bill, down in the second part of the check.
Or if I don't want to click the vendor off, I can click the invoices off, I think, too.
The bills, the bills for the vendors. So they have to be billed here.
We don't pay by vendor. We pay by invoice.
Oh, then yeah. I mean, you see, you can actually pay the bill right here and just pay the one bill. Yeah, you can do that.
Yeah.
Yeah, that's you just go into the individual bill and pay it.
Yeah.
Well, okay, yeah.
Yeah, what it is you get an invoice from a vendor. That's what you're saying, right?
Right.
Yeah, so you get an invoice from the vendor. That invoice is entered into emanage in the acknowledgments and costing window, and then that pushes over to QuickBooks as a bill to be paid.
Okay, all right.
Yeah.
So,
and then you can pay the bill. Like I said, you can pay multiple bills at once, or for the same vendor, or you can pay one at a time. QuickBooks doesn't care. But it's pretty easy to go into. Go ahead.
Can I ask you back on payroll? A lot of our problems have to do with payroll, so it seems like we end up there a lot. Let's look at payroll. You have let's say a project manager who is working on various jobs during the day, but he gets, while he's logged into a job, he gets a phone call and talks to Scott about 3 different jobs for 15 minutes, and then he goes back to the job that he's logged into. What does he do with that 15 minutes?
Well, here's a really nice thing about here's what I was talking about before. If they just create a daily timesheet to get paid, and they're in emanage, okay? Because if they're talking on the phone to somebody about the projects, they're going to be opening the projects and talking about them, right? As soon as you move
not necessarily. No, not necessarily. They frequently have telephone conversations where they have no need to open the project. It may be a quick question about 5 different projects.
But if they do open up the project, in emanage, that's all they have to do. Because once you move from one project to the other, it basically creates a timesheet when you move to something else. So right now, I'm in this project. If I move to another window, it basically creates a timesheet for the time I was in here, even if it's a few seconds.
So it's really a real-time clock.
Yes, that's what I was saying yesterday, is that the timesheets are actually, it's behind-the-scenes timesheets for costing, right? So if I go back to this job, right, and I go to the final profit and loss, I think it has to be, it does log everything, but if it's not greater than a minute, I don't think it puts it in here. I think it's greater than a minute. But you can see here that, let's see if there's anything, yeah, so look, 529 from 124 to 128, okay, and when they have a cost against them, that goes in as an basically an overhead cost against this job because they were in it for 4 minutes, and here 3 minutes. And if I go back to this one, and I go to profit and loss, you see it's real time. It happens as you do it. If I go here to, let me refresh that. If I go here to the labor cost, okay, I'm sorry, employee cost, this is going to have, you see administrator account, 317 to 318, I was in this job. So really, even if they don't have to look at the job, if they open it up, remember it's really simple to find these things. You know, you're going to go from, you can literally go here and you can type in somebody's address or their name or, okay, there's 1, 2, 3, 4, 5. There's that private office for Greg, right? So then I just go there, hit enter, I'm in that project. And as long as I have that project open and it's active, that's creating a timesheet. When I flip even over to something that's not a project, then it's going to stop that timesheet and start a new one for this window. And so if you look here, we can actually see every single thing that we just did. I can do low.
New scenario. I'm with you. New scenario.
Go ahead.
Yep, I'm listening.
New scenario. You've got a project manager again. He's going out in the field, and he's got your new web portal, so he logs in to the job. But he doesn't keep the portal open, does he, or does he?
No. When you're mobile, you'll actually create a cost-only timesheet. So you'll clock into that job with a cost-only timesheet, and then clock out of it when you're done.
So, Brent,
because you're not in the software, it's not automatic. You're actually creating a timesheet for that job when you're out in the field, and it's a cost only because if you start a pay timesheet in the morning, and you clock out for lunch, and you clock back in from lunch, and you clock out for the day, that's when you're getting paid from. But the cost only ones are what you're going to use throughout the day to track the cost against the job, while you're still getting paid for the whole day, without having to make all those steps. Because if you're in the office and in emanage, you wouldn't have to do that because your employee cost is going to go against the job automatically from just being in emanage and in a project or a service ticket or whatever you're in. It tracks your entire day. So when you leave to go to a job, you would close emanage, and then you would go and do a timesheet, a cost-only timesheet on the web portal to track that time against the project.
Okay, what if he's not salary? What if he's an hourly PM and he's working?
Yeah, that's
let me interject real quick. Okay, so an hourly employee clocks in the morning and then they clock out in the afternoon. If they're going to if they're a project manager and they're going from job to job to job to job, and you want to keep track of their cost to that job, then they're going to clock in the morning. They're going to clock, they're just going to use the time clock. But what they would do is they can come in on this web portal, and they can click on this right here, which is a new cost-only timesheet.
Meaning that it's not going to pay them for that time because they're already getting paid for that time.
Yeah.
Because they clocked in the morning and they're going to clock out at night.
All
right?
this this is only a job costing timesheet. Okay? And here, wait, I just want to explain this a little bit more because it can, emanage exposes so much to you. And if you look at this is the final profit. Okay? Here's your product cost right here. This is your labor cost. This is the actual cost coming from a payroll timesheet. Okay, so this includes the burden on that employee. Then if there's inventory costs, that will go there. Journal costs are, as an example, if the guys went out into the field and they had to buy a ladder and you want to, or screws for that job, they can just go into journal costs and apply it. So you can have a credit card charge or cash or whatever. Then you come up, here's your first total cost. Okay, so these are normal, real costs that people look at on a day-to-day, and you have your profit and then your profit margin. Now on this right side, once you pay commissions to a salesperson, that's another cost. So now it lowers your profit, and then there's your profit margin. Then this is something that emanage does that really nobody else does.
And it's because we track somebody's entire day and the cost of them being in any job.
Right. So this is taking the employee cost. And what that is that's anybody in the company just clicking on this tab. When they click on this tab, this project, it's just logging
It
cost.
starts a timer, and then when they click off of it, it closes the timer and creates that timesheet. But it's a cost-only timesheet.
Stephen, let me follow up. I have a lot of confidence in the program to do what you're showing us. My mind is going through the logistics of an individual in the field and what they have to do.
Correct.
Which doesn't show up on this sheet. But so
yes,
what I'm hearing is if
it does. It does.
Wait.
They go and
do you want to hear my question, Philip?
Yeah.
Do you want to hear my question?
Keep going.
So I've got this hourly PM who's out in the field, and if I'm understanding correctly, he would log into the timesheet for his pay time, and then he would log into the portal for the cost-only entry. Is that correct?
Correct.
Okay, great. I love it.
Yeah. Now let me explain one other thing. Oh wait, is there? Oh yeah. Okay. And correct me if I'm wrong, Philip, but if your guy clocks in and he just makes his payroll timesheet, okay, he clocks into the time clock, at the end of the day, he could just be keeping track of his time on a piece of paper, and then he can come in and go into this batch entry and just make a journal entry. Is that correct, Philip?
yeah, but yes, you could do that, but that's going to show up under journal costs, and you'd have to have a journal category of, project manager costs.
Right.
So you could do that, but if they have a smartphone, it's much easier just to log its cost-only timesheet.
Totally. Yep. And yeah, the smartphone. Go ahead.
Yeah, that's ideal. Smartphone is the way to go, but if we have, see, one of the problems we have with some of our workers is they don't take care of their phones. We found it interesting that we finally figured out that they bought their own phone and they took really good care of it, but it wasn't a smartphone. We would give them a smartphone so they could do these things, but they don't take very good care of it, and those broke a lot. So we're back to where they have to use their own phone, and most of them aren't going to have a smartphone, so this journal entry is an important feature.
Right.
Sure.
So,
or you can create the, okay, yeah, that's fine. Journal entry will work just fine. I mean, you're just putting in a dollar amount here and attaching it to an order or a service ticket. You can even do opportunities, and when it becomes a job, you'll switch it over to the order that it's going to go on to. So if you take somebody out to lunch as part of an opportunity, you can put that in as a journal cost on an opportunity. Then when it becomes an order, you can assign it to the order to be a journal cost against that job for taking somebody out to lunch to get the job.
Okay, so one of the options is not to have a physical timesheet that's entered as a timesheet after the fact. That is not an option, right?
You can enter the timesheets, but the thing is, when you enter timesheets in emanage this way, this is a paid timesheet. The time clock is a paid timesheet that also generates a cost sheet. There is no specific cost-only timesheet in emanage. It's only on the portal. That's not to say
Yeah.
we can't
Well,
add that. We can't
that's
add a cost
okay.
only. It's not to say that we
That's
couldn't add a
that's
cost
okay.
only timesheet.
I don't care if it's a paid and cost timesheet. I can do that after the fact.
Yes. Sure.
Okay.
Yeah, so I guess if you wanted to, as an example, let's just do, if the guy's name was Vincent, and here he is, he would clock in at 8 o'clock, and he can clock into a project or not. He could just clock in at 8 o'clock and start a timesheet and then clock out. Then he can clock into a project and then clock out, then clock into another project and then clock out. But what happens is that ends up being kind of a pain in the butt. The easiest way to do it is to use that the web portal or just do the journal cost.
Well, actually, there is actually one other way. I'm sorry, but there is actually one other way. You could create a pay schedule on people that doesn't have a pay rate but has a cost rate. And when you do the timesheet on the time clock, choose that pay schedule that has no pay rate and enter it in here. And then it would only have a cost. Then it would only have a cost, not a pay rate, and then it would be just cost. And you could do it that way.
True.
And you can come back in here, and, you would just have a pay schedule called cost only that has no pay rate but has actual cost per hour. And then generate whatever timesheets you want, because they're not going to pay them.
Right. So they'll have one timesheet that will be clocking in the morning and clocking out in the afternoon, and then you can have multiple timesheets with no pay rate that are logged to different projects. So you can manually, at the end of the day, go ahead and do that if you wanted.
Okay, I feel much better about the payroll. Robert has a couple of unrelated questions. Can we move to those?
Sure.
Yep.
I don't know if you were going to be talking to us about that in your presentation, or if we kind of interrupted it, but there's questions about sales tax, about commissions, about data exporting and importing, things like that. We can start with any one of these. If you want to tell us about the commission.
You actually define all of your commission plans, so you can have as many commission plans as you need for your company. So if I go in here, you can configure them at any time. Salespeople can have a default commission plan, but you can actually change it on the fly when you go into a project. So let me just go in here, and the commission plans are set up inside of the administrator. Okay, so if I go in here, I'm going to see I have different commission plans here, okay, and they can be done by profit or by sale. When they're done by profit, you can actually have a sliding scale of profit. So if it's from 16% to 18%, I want to pay this amount of commission percent. So this can be a sliding scale, and again, each person can have a default, a different default, right? So each one of these things can have a different salesperson to it, or a bunch of salespeople can be part of one commission plan. So when you get into the project and you're ready to pay commissions, you're going to go to the commissions window, which is right before the final profit. So if you notice, this menu kind of goes in the order that your business goes. Okay. So after customer invoices, you're going to receive the payment and pay commissions and then go to the final profit. So commissions here, looks like these were already done. What was that? 1, 2, 3, 4, 5, right? 4, 5, and we'll go into this, and we'll go to commissions. Okay, so all you do is you double click on the salesperson, and if this will come up with their default plan, okay, but you can change that on the fly if they're getting a different commission plan for this particular item. Okay, the customer order determines what they're going to get paid on. You can do it based on percent invoiced or percent paid, and it'll figure out what that is. You tell it when to pay on. So let's say I pay on the 15th of the next month. I schedule it for that. I give it a type, and I schedule my payment. Okay, and then we have our commission payables reports, okay, that will tell you what to actually pay those people. If you wanted to, I'm imagining that you do this, do the commission through ADP as well, right?
Well, we pay it as, yeah, it's part of payroll, but we calculate them in our system. Correct.
Okay. If you wanted to, you could actually you could use QuickBooks to do that if you're using QuickBooks payroll, but and then we just send over the commissions and they become part of their payroll. But with ADP, you know, you'll run this report and you'll see the by person the commission payables with details about what was on there. So the nice thing about this too is if costs come in after the fact of paying the commissions, that you can actually schedule another commission and it'll figure out negative commissions. And you can schedule those for the next commission date. So they would see a negative on their thing, which would affect their total balance to pay. Okay.
Exactly.
Okay, so, and then every salesperson can run their own commission payables report. So if you're a salesperson and you run the same report, it's only going to show yourself. Okay, so they can at any time run their own commission report and see what they're going to be getting.
Nice.
Okay, and...
So, I'm sorry, go ahead.
No, you go ahead.
Is there any other triggers that that determine what the commission will be? Like you said, it's by salesperson, right? What if I want to go by order type or some other you know, parameter?
There's not an automatic. There's not an automatic, but again, you can change the commission plan right in here as you're doing the commission. So if I did a 25%, you see how that changes this? If I go and do then you see what it's doing. When I change to 25%, it knows that it already paid out or scheduled out $493.19, so it's only giving me the difference in the 20 and the 25% plan when I go and do the different plan. Okay. If I do 12, it's going to generate an.
So this little screen that you're showing me, is that tied to an order, specific order, or is this overall?
It's customer order. It's by customer order, which is why it's so important that when you're creating purchase orders, that you're doing them against the order so that the income and expense are together on the order, because that's the only way we were going to get the profit margin to be able to figure out what commission to pay them if you do a graduated scale of commissions.
So who chooses this? So the project manager who's setting up the order determines what commission plan they'll be getting, or who actually determines this?
No, the person paying the commissions determines it. The person scheduling this commission.
Okay, so I have to go every single order that's added in the system. I have to go in and I have to manipulate the commissions.
Well, I mean,
what you would do is, so here's the way we do it: is when we get our person that does the invoicing for final, when they do that action item and they complete that action item, there's a completion task that tells them to create an action item to pay commissions. And then the commissions, then that action item goes to the person that's responsible for commission. And when they double click on that action item, it automatically opens up this commission window. They just double click, they set this, and then they save it, and then they complete that action item, and it's done.
And it depends on if you want to work more.
So the system is not smart enough to know that on this order type, it will be calculating in this certain way. I mean, I have to literally tell for every single order, I have to tell it how to calculate.
No.
Well, they have a default.
If
so
you
if
have
it's by order type, though.
Yeah, if you have a default commission plan for a person.
Yeah, but he's not talking about that. He's talking about by order.
Yeah, what is it? We have different structures. Regular orders, yeah, they're default. But then if it's order, if it's a direct order, there's a different structure that applies, that we calculate commission in a different way. Can the system recognize this and automatically assign that proper agreement or calculation agreement so that I don't have to set it manually for every order?
Yeah.
We don't automate that.
Yeah, that's not an automated function. Yeah. It will
The other thing that you can do is in here we have a search for customer invoices. So if you do it based on when somebody paid, you can actually go and say, show me everything that paid this week. Okay, and everything that paid this week is something that you're going to pay commissions on. So there's a commission amount in here, somewhere, commission amount. You see that this is already scheduled. Okay, but if it was 0, I would know I have to schedule that commission. I can right-click right here, and I can go into modules and commissions. But that's as far as we go with that kind of automation. The commission plan is generally is by salesperson.
Okay.
So the more that we automate, the more that
I guess we could go by exception where we could say, okay, well, most orders will be standard, and then we have some of those orders that are direct. We could look those up and set those up manually, as you said.
Well, and if you name the commission plan, if you name the commission plans right, it should be pretty easy to get them in the list, right? I mean, it should be, if it's a direct, you could call the commission plan direct, and then it would be really simple to know or to choose that as a list.
What if? No, go ahead.
No, you go ahead. That's all
right. We also pay commissions to support personnel that is based on the gross profit of the order. Is there a way that you can involve more than just one person on a commission payment? And those people who would be involved would be calculated on a completely different agreement. So it would not be a portion of the salesperson's commission. It would be their own commission agreement.
Yes, what you'd actually have to do is you'd have to create a salesperson out of them, but every project can have multiple salespeople and different, and they would get a commission then off of they'd be listed in the commission window as a salesperson that would actually get commission. So you would add the real salesperson, and then you would add the support person into the project as under sales credit.
Okay.
You see what I'm saying?
Yeah.
And then you could pay them commissions as well, and under their own plan, because they would have their own default plan.
Okay. I like that. Great.
Yeah. Yeah.
All right.
And then I think your other question was about the tax rates. And inside of the administrator is where all the tax rates are. And so under zip codes is you could set the tax rates up for the state, the county, and then the city.
So our sales taxes is the state plus the county plus the municipal. So it's these three added together make up the sales tax rate for the zip code. Okay, so when your company is in a zip code, it knows what the tax rate is, or it's tax exempt. Okay, and certain things are taxable or non-taxable. That's by parts category. So it pretty much automates that. The only thing you have to be aware of is that if your tax rate change, you just come in here and you change like this. See how there's a 0 and a 6 here? That means somebody added a new zip code. So I just need to go here and put a 6, and that'll merge those two together. Okay, but the tax rates also show on every company. So when you add a company, let me go in here. When you add a company, it has the tax rate right here for the count or for that zip code as you're adding them, and then it uses that tax rate unless they're exempt. Okay.
So you guys don't have anybody else managing. You don't have anybody managing the tax rate. In other words, currently in our system we get an email, and once a month they import new tax rates. We don't have to worry about it. This is something we would have to kind of watch on our own.
Yeah, we don't do that.
Okay.
And actually that's just as well, because I think we've had as many problems as it's solved by having it that way from what I've observed.
Yeah.
So that's not a problem.
So, and the tax is done at the quote level, right? So when you're doing quotes, that's when the tax is figured out. So when you immediately go into the bill of materials, okay, it's going to have your tax rate right here. If they're exempt, it's going to be 0. It'll say 0 here. If it's not exempt, it'll say whatever the tax rate it's going to use on all of your bill of materials. That then becomes your order and brings over the tax. But again, by parts category. So in the administrator, you actually tell it, you're actually telling it which parts categories are taxable or not. So it's actually, as you're adding the parts, looking up to see whether you said something was taxable or not. So contract services are not taxable, but materials are taxable. Okay, so as you're adding things, it's looking at the parts category of the items that are being added and just determining whether things are taxable or not, and then using whether it's tax exempt or not.
Also, in different states, there might be different rules. Sometimes labor might be taxable. Sometimes it may not be taxable. How is that distinguished based on where the business is done?
What you'd actually want to do is you'd want to have, if you have certain places where services are, you'd want to have the contract services that says non-taxable and a contract services that says taxable, so that they have a different parts category, so that they're adding one. And then in your description, you would have something like, you would see when you're adding the part, it's either taxable or non-taxable.
So the project manager has to be aware.
But actually, the other thing is you're talking about having Utah and Arizona, right? Those are going to be separate. Those are going to be separate corporate divisions for you. You see how this is furniture company, but every single one of these settings is by corporate division. So you would have Phoenix or Arizona, and you would have Utah as two separate. So then each one has its own settings for whether things are taxable.
Okay. Okay.
So that wouldn't be an issue here.
Okay. Great. Awesome.
All these drop-down lists, any settings, are by corporate division. So you may share the same drop-down list items, but they have different settings based on the corporate division they're a part of.
Yeah, so if you notice how this one is contract services, furniture companies assign to it. If there's multiple corporate divisions, you can assign those corporate divisions or not.
Understand.
Yeah, so corporate division for us is really any way that you want. Like for you, your companies are two separate financial entities. So each one is going to have its own QuickBooks file. So by corporate division, we assign the QuickBooks file so that each, when you do a project that's for Utah, it'll go this QuickBooks file. When you do one for Arizona, it'll go this QuickBooks file. But in emanage, you can look at both corporate divisions together.
If we do two separate files in those two separate entities, though, how are we going to consolidate them into one financial statement?
Well, in emanage you'll have this, but in QuickBooks you'll have two separate financial statements because they're separate financial entities.
But they will still be on the same file. They'll be on the same file.
They wouldn't be in the same QuickBooks file because the QuickBooks only allows you to have one tax ID per file.
Per file. Okay.
Right. So you can only have one legal entity in one QuickBooks file. So
we're going to work on this. We've got a challenge here because from a legal standpoint and liability standpoint, we're going to have them set up as separate entities in QuickBooks and we have separate checking accounts too.
Oh yeah.
So we're going to have to figure out how QuickBooks side of this is going to work.
For the consolidation.
And we ought to just work on that on our own time.
Sure.
You know what we did is I have a separate corporate division. It has its separate tax ID. It's a separate QuickBooks file, separate bank account and everything. And then what we do is we actually, inside of our main company, we have we just make a journal entry to show what it is for that company, the total. And then we put it on one set of books. so we can see it all together on one set of books. But that's something I would talk to your CPA about.
Well, and QuickBooks might even allow you to create a third company file and merge the two together so that you have one consolidated but keep the two separate.
Yeah.
You see what I mean?
We'll play around with it. We have an in-house CPA. We'll go talk to him.
Oh yeah, there you go.
So going back to the sales taxes and the reporting, do you have some simplified reporting where it's really easy so that we can fill out our monthly sales tax report?
We have a sales tax report, so it's right here, and you tell it you want to do the invoice date between. So let's just go back a couple of months here, and we'll go to today, and we'll run the report. And it'll be broken down by state, by county, and by city, your taxable and non-taxable income and your tax payable. Okay, and then your total sales.
You can run this report for each entity separately.
Yes, corporate division. See how it says all divisions? You can run it individually or together, any way you want to.
Oh, I see.
So yeah, and then you can actually group this. So if I wanted to see, I can group these by state. Okay, and then I can see the details and the totals for each state here. Or I could do it by county or by city. However I want to group them, I would see those totals there. And of course, there's grand totals at the bottom.
Okay. And again, it separates the city and the county and the state amounts.
Yes, because because each one of these, Oakland County has Birmingham and Bloomington Hills, but each one is separated out here in the taxable income, non-taxable income, tax payable.
Okay, great, perfect.
Now this is our report, but QuickBooks, if you have QuickBooks handling your tax, it's you can actually program in the a tax group. Okay, and if you use QuickBooks to do that, we import the tax groups, and you just assign the tax group, and then it would split it out into your different tax agencies that you have to pay. So either way you want to do it, this is pretty simple. If you do it with us doing the tax instead of QuickBooks, then it pushes over a tax payable into QuickBooks. Okay, but if you use QuickBooks to do it, then if you have different, agency or you have a state and a county, those would be two items in a tax group that then would break it out for you in an account in QuickBooks, in two different accounts for one for the county, one for the state. So it depends on how you want to do it. It's either way is pretty simple. eManage, like I said, eManage will assign the tax payable account based on what you tell it. QuickBooks, with QuickBooks, in fact, this database we're in right now, when you make an invoice, I don't know if you noticed, just go back to customer invoices. When you make an invoice, there's a place for the QB tax item. Okay, so that's a tax item that's done in QuickBooks. So we calculate the tax, but then all we're doing is we're saying this one's taxable, this one's non-taxable, which comes from the parts category being taxable or non-taxable. So it automates that process. But you would have to choose which tax item you want to use, or you can assign this at the company level. The company level can have a QB tax item here. So when you do that, then every invoice that you create or every order that you do, every invoice that you create would automatically go to that tax group or tax item in QuickBooks. So either way, if you guys get closer to deciding and you want to talk more about that, it's really simple to do either one. And I can show you how either one works.
Okay, great. Another question I wanted to ask you, in terms of the date management in eManage, can you limit like the dates when things can be invoiced? Like, let's say we want to close this period, we don't want any more invoices for this period, we want to close that. Is there a way to manage that?
We don't do closing of the month, but I'm trying to think of the equivalent here.
You know what I'm trying to do, right? I mean, we want to make sure that we don't invoice. Okay.
Right, so that you don't, so nobody backdates an invoice trying to say that you got more income than you did. Yeah.
Right.
We don't do that at this point, but I could think about that.
How do you guys handle that?
I'm sorry?
How do you handle that then?
We don't do that, and I mean, when you make an invoice, you get to choose the date. So, and we do have customers that actually do that, and I don't agree with it, but they do that. So I don't know that I could limit that and not be strung up somewhere. We have a customer, in fact, that we were looking at the other day that was invoicing things 14 days after they happened and in the next month and putting it back to the, So while I don't agree with that, I can't really stop people from doing that.
Right. Well, typically, see, we have our invoicing has been done by project managers because they typically know when to invoice and what's going on. And so, we want to be able to somewhere, in the, like on the 2 systems ago that we were using, there was a table where we could say, okay, the allowed invoicing date is from this date to this date. And so when they were choosing the date on the invoice, it would just limit the dates that they could use. So it was a simple table that was kind of allowing or limiting what the dates could be chosen. But
just one thing to think about is what they can do now with the workflow that's in emanage. That project manager can just go to actions, and then I'm on a company, right?
Better yet, I don't really have a problem with allowing that to be an option, so it wouldn't be a big issue for us to build that in. It really wouldn't. I mean, emanage gets better and different every day, so because people ask for things. So if that's something that we can do, then we'll look at doing that. So it wouldn't be an issue.
Yeah. Okay.
I mean, the way this was built over all these years is listening to people and figuring out what they need to have and building it. So.
Right. Well, and then what I was just saying is, we have it, so our people, they create an action item to invoice the customer, and it goes to our general manager, and she handles all the invoicing. When you open up the action item, it opens up the project to the invoicing page, so it takes, 30 seconds to create an invoice.
But I'm with you, Robert. I've dealt with a lot of people that I don't really trust and that I think would do that. In fact, if you look here, if you look at this action item thing, if you try to set it to yesterday, it says you may not set the due by date less than now. So I get what you're saying because those are the kind of people I've dealt with. So we probably would not have a problem building that in.
Okay. It's not that we don't trust people, it's just that we want to prevent errors more than anything.
Right. Yeah, I mean, the invoice date defaults to today, but I get it.
Yeah.
So we could look at doing that, no problem.
Hey guys, I'm gonna have to run here in by 4 or 5 o'clock your guys' time.
Yeah.
And you guys know that we recorded yesterday and today, so we can make the recordings available to you if you want to go back and look at any of it. I can send you guys the links so you can watch anything over again that you might have not caught.
That's great. Your timing's perfect, Stephen, in leaving, because we have a conference in this room in 2 minutes, so perfect time.
I do have some other questions that I was wondering when I could ask those.
Oh, you know what? If you want to shoot me an email or we can talk on the phone, But shoot me an email with those questions, and then maybe with your direct phone number, then maybe I can call you and we can set up a time. And if I need to show you, we can do a quick go-to-meeting.
Perfect.
I like it.
Okay, I'll get the email from Brent and I'll send you an email.
Sounds good.
All right,
All
and I'll
right.
send you guys a link to the video, and so you guys, or the 2 videos from yesterday and today.